Hello and welcome to another program in the 10-Minute Tips series. This one is titled An Overview of Export Credit Insurance through the Exim Bank. My name is Michael Dennis and I will be the presenter today. Let's provide a brief overview. The Exim Bank is an independent, self-sustaining government agency. The Exim Bank charter states that it will not compete with the private sector. The Exim Bank's last year of full operational activity was 2014. Nevertheless, the Exim Bank is still in operation. The charter of the Exim Bank states that it is required and involved in helping U.S. companies to export products and services more safely. In turn, this helps U.S.-based companies to maintain jobs in the U.S. and to create jobs in the U.S., which of course leads to a stronger national economy in the U.S. The Exim Bank does so by financing exports and by enabling U.S.-based companies to export on open account terms based on a protection. The specific protection in mind here is credit insurance. U.S. content requirements. Content in this context refers to the country of origin of goods and services that go into an export, that make up the product in question that's being exported. Eligibility requirements, U.S. content requirements, are based on the amount of foreign materials and labor and overhead that are part of the exported product. Years ago, the requirement under Exim Bank was 100% U.S. content. That is no longer a requirement. Generally, products must exceed 50% U.S. content. And the products in question to be eligible for Exim protection and help are products that are manufactured in and shipped from the United States. The goal, the intent, the expectation, the requirement for U.S. content is that U.S. content requirement ensures that U.S. jobs benefit from the involvement of the Exim Bank in the entire process. Uniquely, the Exim Bank largely requires on representations being made by U.S.-based companies about their U.S. content. So let's just pretend for convenience that there's a requirement of 55% U.S. content. How is that number arrived at? How does the Exim Bank know that the export product in question contains 55% U.S. content? And the answer is the companies applying for the assistance through the U.S. Exim Bank make the representation to the Exim Bank that their product contains greater than 55% U.S. content. That's it. There's no checks and balances. However, there is a criminal offense to knowingly and intentionally lie to the Exim Bank in connection with the U.S. content. Minimum qualifications. For a company to do business with the Exim Bank, they need to have been in business for at least 3 years. The company in question needs to have positive net worth. The company in question has to have at least one person working full-time, and the company in question has to have one or more exports that meet the U.S. content requirements that we described and discussed on the previous slide. Prohibitions. So the U.S. Exim Bank is not interested in and cannot provide coverages for the following items. Defense-related goods and services. We're talking about, a very simple example, guns and ammunition. Not eligible. These are prohibited under Exim Bank rules. Sales to military buyers, not going to be covered. The Exim Bank prohibits grants. The Exim Bank prohibits personal loans. The Exim Bank, not surprisingly, prohibits exports to restricted countries, to persons on the denied persons list, the denied parties list. There is no coverage for imports of goods or services into the U.S. This is strictly outbound. These are exports only. And one of the prohibitions is no funding for startup companies. Let's talk for a moment about export credit insurance and the Exim Bank. So under risk mitigation services, we find the idea that Exim provides export credit insurance for short-term and medium-term sales on secured or open account terms. The intent, the goal, the expectation is that credit insurance will permit U.S.-based exporters to safely extend credit terms to foreign buyers, and this will result in higher sales. If the only option that you have in connection with a foreign applicant or customer is to require that foreign applicant to pay in advance, to wire transfer the money before the shipment, the reasonable expectation is that your sales are going to be limited by the fact that you cannot offer open account terms. By permitting U.S. exporters to sell on open account terms, thanks to the fact that those exporters now have credit insurance, the expectation is that sales will increase. Risk mitigation services such as these enable U.S.-based companies to extend open account credit terms to their existing customers as well as to applicants, and at the same time to attract new customers and enter new markets that the U.S.-based exporting company might not be comfortable working in because of concerns about things like political risk or sovereign risk or just the risk of non-payment on a commercial basis from a foreign company in a foreign country that they've never done business in before. So by virtue of having credit insurance or export credit insurance in this scenario, the goal, the expectation is that U.S.-based companies can and will attract new customers and can and will enter new markets. An added benefit, of course, of credit insurance is they accelerate cash inflows by virtue of the fact that if the customer defaults on payment or there's serious delinquencies in payment, the credit insurance will, if you like the term, will kick in. Covered risks. Insurance coverage available through Exim Bank involving exports is available for these risks: insolvency on the part of the debtor company in the foreign country, bankruptcy or the local equivalent of bankruptcy by the foreign customer in the foreign country. And the third, very important one in the context of a U.S.-based company, is protracted payment default. So the first two, insolvency and bankruptcy, fundamentally mean that the company is unable to pay by virtue of the fact that they're insolvent and bankrupt. Protracted default is different. They may in fact have the ability to pay but simply be unwilling to pay. But from the creditor company's perspective, unable and unwilling are equally problematic in the context of cash flow. What insurance coverage for protracted default means is that you don't have to wait for the company to file bankruptcy, the customer, I should say, to file bankruptcy, to file a claim for payment of the covered sales under the credit insurance policy. In addition, Exim Bank offers what is called political risk coverage. That's very important in certain parts of the world, because what political risk coverage offers to a U.S.-based company considering exporting is protection against things like war and revolution and insurrection that would, not surprisingly, make it unlikely that a company in a foreign country that is in a war, in a revolution, involved in insurrection, is going to be able to pay right on time as the U.S.-based company expects them to do. Political risk coverage also involves cancellation of import and or export licenses, which is not surprisingly a condition that would make it very difficult for the U.S.-based company to get paid. Interestingly, it also covers, in terms of political risks, foreign currency transfer related risks. The Exim Bank offers short-term export credit insurance. The trade credit insurance policy through the Exim Bank features these aspects. A streamlined application process, very important for the U.S.-based company. A process in which, more specifically, the Exim Bank obtains information on the first handful of debtors and then provides quotes and debtor approval within 5 business days for amounts up to $300,000. There's also, under short-term export credit insurance, what's called a small business multi-buyer policy. This is for U.S.-based exporters with annual sales on open account terms of less than $7.5 million, and it involves the small business aspect involves a scenario in which the U.S.-based company meets the SBA, the U.S. Small Business Administration's definition of what a small business is here in the U.S. There's also a multi-buyer policy available through Exim Bank. The key features of that is that this multi-buyer policy is for exporters not defined by the U.S. Small Business Administration as being small businesses, or, and more commonly, companies with annual export credit sales of more than $7.5 million. And not surprisingly, the premiums for credit insurance are based on the term, the payment terms and the term, the country, and the buyer types. Exim Bank also has a single buyer policy. Okay, and this, the key feature here is this is coverage for an exporter that wants to insure a single shipment or multiple shipments to a single buyer, a single foreign customer. In other words, this is a policy that says you don't have to insure all of your exports. You don't even have to insure all of your exports to a certain country. We just want you to insure, it's a scenario in which a company just wants to insure a single shipment or multiple shipments to a single buyer. Again, premiums are based on a variety of factors, including the payment terms, the country, and the buyer type. But the good news is, under this particular program, there is no deductible, but minimum advance premiums are required. My name is Michael Dennis. I hope you've enjoyed and found this presentation to be interesting, and have a great day.